Dear Vice President, dear ladies and gentlemen, first of all, I would like to thank the organizer Xprim, for inviting me to the FIAR conference here in Bucharest, and also Xprim for the very important role it is playing in the greater Central and Eastern European region, and for building bridges between the insurance markets already for so many years. I think it's a very, very important role you're playing. Thank you very much for this. Ladies and gentlemen, what is my role today here? Why I'm standing here? Basically, ladies and gentlemen, I would like to present to you in the next, let's say, 16 minutes, a very broad overview what's happening on trends on EU level, on EU regulatory level, and inform you what's going on, and on the other hand, to tell you what the VVO as an insurance association is thinking about this regulation and what our view is. Having said this, I would like to jump already into the agenda, and I have chosen 7 topics, 7 issues I would like to discuss today here with you and give you a broad overview about these respective projects. Having said this, I would like to start already with the first topic. I think the first topic everyone here in the room, I imagine, will be very busy with. It's about the implementation of the Insurance Distribution Directive, the IDD. Where do we stand actually at the moment? So there has been a postponement of the implementation, so the transposition time for the national legislator has been postponed until the 1st of July. And for insurance companies, it's necessary to implement the different provisions until the 1st of October this year. I don't want to go into further details because actually what I want to comment on already is what did we learn of this legislative project, the IDD? What are the lessons learned? The first thing is, actually this is a graph from Insurance Europe. What together with the IDD and other legislative projects, what we saw in the last years for insurance companies, this coming from an alpine state, it's like an avalanche of legislative projects, which of course bears a lot of costs and efforts for insurance companies. You can see here how the regulatory environment has been developed over the last years. And I can tell you it's a real challenge. And there, talking about the IDD, we have to ask the question, is this actually, this mass of new provisions really a benefit for the consumers? Actually, what should be actually the idea of the whole thing? If I can give you my comments, sometimes I would doubt this, and I think we still have to find the right balance also in the future. This brings me to my second point. What you see here, it's a regulatory iceberg. So on top, you see it's level 1, it's the basic legal act on EU level. That's actually everyone is aware of. But particularly during the IDD, what insurance companies experienced is that on level 2, coming from the European Commission, on level 3 from Europa, in the deep, dark regulatory ocean, a lot of different provisions have been added. A mass of different papers insurance companies have, in fact, implement within their own companies. And these processes are sometimes not very transparent. It's difficult to see, okay, where is what coming from? And a very important point is also the timing. What we experienced with the IDD was that basically, if you look here at level 1 until level 3, for the implementation time, there were 2 years to implement the IDD. And out of these 2 years, I would say roughly 90% of the timing has been covered actually from level 1 to level 3. And so in the end, we ended in a situation where for insurance companies, there were only some weeks or months to implement those provisions. This brings me to a conclusion. And this conclusion would be the following. Also looking at the PRIPS experience, where also postponement had finally been necessary. We should think of maybe in the future, if we have, once we have all provisions on the table, the legislator has given us all provisions on the table, and after this point of time, there should be 1 year of implementation for insurance companies. I think this would take a lot of the pressure out, and I think it would be beneficial for everything. Having said this, we have to be very, very much aware that the provisions for IDD, they have to create legal certainty from day one. Because in contrast to Solvency II, which was very much a management task, as to say, the IDD, everyone running out in the streets and selling insurance contracts, everyone who is doing this has to have the right legal basis. If this is not the case, we can think of many, many different problems, particularly if you look at different court cases, etc. So here we have to be very, very careful. Looking now to bring in also the experience or the perspective from the CE region. What do we see in the CE? Looking about the implementation process, we're in a situation actually I think where no one wanted us to end up. So we have a situation where in Slovakia and in Hungary, the IDD is already applicable. Insurance companies already have to fulfill the IDD rules as of 23rd of February. We have, on the other hand, other countries where there was not even a draft of the national implementation law presented to the associations or insurance companies. So we see that there's a huge, let's put it, diversity in the process of the implementation, which I think is a certain challenge for companies who are actually operating in the CE area. I don't want to go into all these details, but looking on the CE perspective, we have identified in the implementation process some issues that might be important within the CE region, like starting about group insurance contracts, where at the moment in many of the countries it's the case that the policy holders are rather seen as a distributor rather than a customer. I think there still has to be done some more work on the definition of the target market, which means giving more granularity to it for the insurance companies to implement it. And we have an issue where in many markets, I think with implementation, we're still at the point that, for example, corporate business is still seen like or has the same provisions like consumer business, which definitely is not the case. But I don't want to go into further details. Having said this, there is a second project at the moment under intense discussion on European level, which will have also a tremendous influence on our insurance markets. It's the Pan-European Pension Product, or the PEP. So there was a legislative proposal approximately 1 year ago, and basically it's a product which should be an additional in Pillar 3 to national pension products. It should be cross-border portability. That's the reason why you see here the suitcases, so you can use the product in all different markets. And what is very important also on competitive reasons, it can be offered not only by insurers, but also by banks, and most probably even more important, by investment funds. So the legislative process is in progress, and what I could do is to define some particular key issues which are critical for the insurance sector. First of all, that in the Commission proposal, there is no obligation for lifelong annuity payments, which in my opinion is a certain contrast if we speak about the pension product. Then there are still different protection standards between the different providers, which is critical, and the biometric risk component so far is only an option. I don't want to go into further details, but also tell you that at the moment this PEP should, as soon as it is adopted on EU level, it should be already enter into force, the implementation, which I think is also a certain critical aspect we still have on the table right now. For the insurance sector, what is important to know, because I think there are different discussions. Some people like this product, the PEP, some not, some say it's stupid, whatever, or some say it's great. However, the discussion is, I think we have to be aware that this is like a plane and it was already boarded. So people are already sitting inside, this plane will take off. And I think for the insurance sector, it's important that wherever this flight is going, it should go to the right destination in a good way, that all the important issues for the insurance industry are on board. Having said this, I want to point out some particular points from the insurance side. So First of all, it should be a truly long-term product, which I was already mentioning is maybe not the case already. It should be a real pension product with lifelong annuities. I recently heard a study that if you give people, let's say at one point X of time, a big amount of money, there is the trend, or the study shows that people rather take this money, buy a new sports car, or give the money to their grandchildren or something. But this does not actually lead to the goal to fill the pension gap, and that people have until the end of their lives pension savings. The biometric risk, no need to say, should be rather compulsory than optional. I was already mentioning the same level of protection which is necessary for all providers, so also for investment funds, the same provisions as for insurance companies. There also has to be a level playing field between those providers. It should be not only the case that the product is as complex that only big players can offer this product, but also smaller. And for sure, what is clear, this is a mass product. We're talking about a mass product with also certain influences on the insurance markets. And a personal opinion, if this project should really fly, I think it is necessary and should be successful. It is necessary that there are respective tax incentives. The third project at the moment discussed, it's maybe for many among us it's more theoretic project. It's the ESAS review. The ESAS, it's the European Supervisory Authorities, and well understood for the insurance sector, it's about how EIOPA should be governed in the future. There was a legislative proposal this autumn in 2017, and this proposal covers the fields of the governance of EIOPA, about the tasks and powers, and as well about the funding. So the legislative process already started, and ideally it should be finished before the elections of the European Parliament in May 2019. If you look what the Commission has proposed, you will find, and you can see it here, a very interesting point, which means that this is said to be only the first step in direction towards a single capital market supervisor. Having read this, I was making a small picture. And here on the left side, you see actually how this single supermarket supervisor would look like. So this is, let's say, the regulatory ocean where the ships, the insurance companies have to navigate. And you can see you have different, let's say, beaches with different specificities, different grounds. And in our view, it would be rather more important. There is no doubt that we need a European system. Everyone has to be in a European system. And the supervisors, in the end, have to be close to local market specificities. This means that as we have at the moment, for example, the colleges of supervisors, I think this is important, and we need a strong role of the national competent authorities, meaning the supervisors. Why? Because the local specificities in the insurance fields are very obvious. It's about the civil law, where we have huge differences. It's about different pension systems, different health systems, etc. And I think also important point in a political sense is that, however, we still have local accountability, and I think this is also something very important. Having said this, we think that talking about the tasks and powers of EIOPA, we rather need an optimization of the existing powers rather than new ones. And we would see rather the role of EIOPA as an assistant to national competent authorities, as you can see it maybe also in the picture on the right side. For example, in the field of internal models or in the mediation between freedom of services conflicts. Important, however, for EIOPA is to assure that there is a consistent application of EU law in all member states. And what is of utmost important for us is that there is a transparency and democratic control. So we want to avoid a situation where there is EIOPA developing its own initiatives without having any transparent or democratic control, which means in the funding, The national authorities have to play an important role and have to channel the funding to Europa, giving them a certain control function. And also in the governance, it's important that the European Parliament, national competent authorities, but also the stakeholder groups are involved in those governance bodies. There is another project. I don't know if everyone has this already on your regulatory radar. There is the review of the motor insurance directive, which, well understood, is a very, very important project, particularly in the sea region, where motor insurance plays a very important role. And the news I can give you is that there is at the moment an inter-service consultation within the European Commission. And at the moment there's a plan that by the end of this month, May, there should be still a proposal published by the European Commission. Having said this, we would have identified 4 areas which could be of particular interest for the sea region. First of all, there's a discussion about minimum amounts of cover, where particularly in Western European markets there's a different position, that this is maybe like in Eastern European markets where you have a very low level of premium, which could add a lot of pressure to the sea markets. Other areas, it's about it's about the scope, about the MTPL scope, that vehicles could be also used outside public road traffic. In some countries this is already the case, in some not. Also, I think important discussion in the sea area. It's about the motor guarantee fund, where there's a discussion about extending the mandatory cover and including as well the insolvency of insurers, including organizational requirements. These requirements could be on a geographical scope. The question, are there also freedom of services companies included? It's about the target level, how high it should be. It's about the methods of funding, ex ante, ex post. And also who should be the carrier. Is it insurance associations? Is it the supervisory authorities or the motor insurers bureau? Another point we have identified, it's about where we could have some movement, it's about the claims history statement, which could lead to a new calculation of discounts. But overall, we end up, I think, with this discussion with questioning ourselves, is there a single market, in a single market, something like the same risk, or do we have different risks in different markets? I would like now to talk about the trend I think we will see very much in the next years. It's about sustainable finance. There's a discussion, there was an action plan presented on very high political level this March. And the discussion is opened that aspects of sustainability should be more and more embedded also in the regulatory and financial framework of the EU. Meaning, for example, there should be created something like EU, let's say, green label for financial products. There are discussions, there should be an advice for consumers according to sustainability preferences, which, please listen here now, still should be included in the current IDD, which means as of October, as it's on the table at the moment, you have to inform your customers also about possible preferences regarding sustainability. Very, very tricky, very difficult to manage this timeline. And of course, there's also the plan to have sustainability included in Astosia prudential requirements. And here we will have a discussion with the 2020 Solvency II review with giving, let's to say, for this green label, having less own capital undermined. What are the key issues with this discussion? Well understood, we come from a discussion from, let's say, nice to have, to discussion of you must have, with particular, of course, consequences for the investment strategies of companies. You can ask the question, if I invest in the windmill park, is it really less risk? Is it really risk-free? I would leave it with this question. The point what we see is that at the moment it's also about social aspects, social investment, which does not really play a role at the moment in the discussions, which is important. And also important point is that there might be not only a green label, but also a brown label for financial products with respective consequences. What we see as positive, I think also within the CEE region, is that with this discussion we also enter in a discussion talking about the consequences, and you see it here, it's a graph from the European Commission, of weather-related damages. And here we enter directly the field of NatCat. So here it's stated that there is something like negative consequences for our economies out of catastrophic risks. And I think for us, insurance industry, this discussion is of utmost importance. So far, it has not been led. It has not been, let's say, on the agenda of the Juncker Commission. But I think it's necessary to bring it in the public discussion. This is really something I think we have to strive to go in this direction within the next years. Having said this and bringing me to an end, I want to raise your awareness for this campaign, which is actually launched by Insurance Europe. It's a campaign which is called Data for Drivers. It's a petition, and actually it's attacking the question, who is the owner of data of your car? Is it the car manufacturer? Is there a new monopoly of keeping the data where insurers don't have access to? Or is it the driver? Is it the driver who can decide what to do with the data? I don't want to explain this in further detail. I think we still have a discussion. Ladies and gentlemen, thank you very much for your attention, and thank you very much for discussing here together insurance-related aspects within the Central, Eastern and European insurance markets. Thank you much.